Welcome to Morningstar. Samsung reported its worst operating profit in 14 years. But what also caught investors' interest in the earnings is its announcement to cut the production of memory chips meaningfully. What is in store for Samsung and the broader chip industry? We're asking our Director of Equity Research, Kazunori Ito. Hi, Kaz. Can you tell us what is the reason for Samsung making such an announcement?
Yeah, well, I believe this is the first time in 25 years that Samsung has officially announced the utilization cut. And I think it shows how memory suppliers are suffering from the heavy inventories and memory price erosion. So shipments for smartphones and PCs recorded double-digit declines due to lockdowns, supply chain disruptions, inflation, and macro uncertainties. And as a result, the memory industry is suffering from the worst oversupply in 13 years. So memory suppliers, including Samsung, must work to reduce the utilization in order to digest the heavy inventories and prevent further price erosion.
So Samsung did not disclose the size of that cut, but what is your estimate, and can you tell us about the price and the profit impact that will bring about?
Yeah, we estimate that Samsung may cut 20% of production, so which is similar to its peers, which are cutting like also 20 to 30%. So prior to Samsung's utilization cut announcement, we had forecast that DRAM pricing will stop declining and stabilize in the December quarter of this year, and then rebound in 2024. Therefore, Samsung's utilization cut will help this to happen somewhat earlier, and as a result, Samsung's profitability would recover much faster than we had anticipated.
You mentioned smaller peers like SK Hynix and Micron also cutting their production. So will their shares stage a rebound if the profit do turn around?
Well, first of all, given the production lead time of a few months for the memory chips, utilization cut by major suppliers, including Samsung, will help reduce the supply, mainly in the second half of this year. And on the demand side, we expect smartphone and server demand to gradually recover in the next few quarters. So as a result, we forecast the supply-demand mismatch to tighten quarter by quarter, which will help slow down the price erosion in the following quarters. So going forward, we forecast that the supply shortage will occur in 2024, which is actually the opposite of 2023. And the chip price will recover significantly throughout the year. SK Hynix and Micron have announced not only to cut utilization, but also to significantly reduce the capital spending to protect their cash. As a result, production capacity expansion will be quite limited this year and will not be able to fulfill all the demand in 2024, which is resulting in the memory price recovery. So, in conclusion, we think the rebound is not fully reflected in the current share price and expecting the share price to go upward.
Lastly, what is the fundamentals of Samsung looking like?
Well, again, based on the view that the memory price will recover in 2024, we can say that we are at the bottom of the memory cycle. So even though the recovery of smartphone and PC demand is still somewhat uncertain, actions made by the memory suppliers, such as cutting utilization and capital expenditure, will help the recovery later this year and happening in the next year.
Thank you so much, Kaz. For Morningstar, I'm Caitlin.